Breaking news, the Hollywood Teamsters, just the latest industry group to give the thumbs down to Netflix's $83 billion deal to take over Warner Brothers Discovery. And if you know, you guys, nothing in Hollywood gets done without the Teamsters. They are calling it basically and calling on antitrust regulators to block the merger because they say consolidating Netflix's streaming power would kill jobs and raise consumer prices and hurt the entire U.S. entertainment industry. The argument here is that so-called greed-fueled consolidation is a threat to the livelihood of all the entertainment industry's workers here in the States, while competition has benefited the industry's growth. Meanwhile, the Netflix executive team got on a call earlier today defending the purchase. Listen to Netflix co-CEO Ted Sarandos.
I know some of you are surprised that we're making this acquisition, and I certainly understand why. Over the years, we have been known to be builders, not buyers. We already have incredible shows and movies and a great business model, and it's working for talent, it's working for consumers, and it's working for shareholders. But this is a rare opportunity, and it's going to help us achieve our mission to entertain the world and to bring people together through great stories.
Well, to be clear, it's not helping the shares of Netflix right now. They are down more than 1%. But streaming, which accounts for nearly 50% of TV consumption, according to Nielsen, is dominated by Netflix, which has 8% share. Of course, YouTube's bigger, but everybody else is smaller here. The Teamsters are joining a group of Hollywood producers who sent an anonymous letter to Congress describing a potential economic and institutional meltdown in Hollywood should the transaction go through. Is this thing even going to go through? Joining us now to weed through the noise is the nation's top media analyst when it comes to Netflix, Oppenheimer managing director and head of internet research, Jason Helfstein. Jason, gut feeling right now first on the Netflix Warner Brothers Discovery deal and the price that they are offering.
So I wouldn't be surprised if Paramount found a way to come up with kind of a headline higher price.
Really?
Right? They'd have to be, it looks like, $30.75 overall. But there's going to be more financing challenges for Paramount than there would be presumably for Netflix. Interesting what you just commented. Would the Teamsters support Paramount buying Warner Brothers? Because I think no matter who buys the company, there's going to be ultimately consolidation and efficiencies. So that's kind of our view right now. We can talk about how you want to define what is the market. That's really going to be the debate here.
Really? Okay, so you think that it is possible Paramount is far from done here. They want in and they're ready to offer, as you said, $30.75, is that correct, for the whole shooting match, the whole company?
It seems that's what they would have to be, right? I mean, if you just look at so assuming the cable network stub is worth $3 a share, that's basically what it would add to if you take the $27.75 Netflix bid, for the streaming and the studio.
To be clear, Netflix only wants the streaming and the studio. So
Correct.
When you add from that to the $3, do you think it's worth $3, the cable parts of this? Or is that just...
I mean, we don't cover Warner Bros. Discovery, so I really can't comment. We cover Netflix.
Right.
I mean, as far as what Netflix has offered, if you kind of take the $2.5 billion of synergies that they've talked about just from a cost standpoint, not revenue synergies, and you kind of play out the numbers over by year 3, it looks like they're offering 14 times year 3 cash flow, which historically might be on the higher side of what a studio is worth, on the lower side of what a streamer is worth, but also what does the world look like in 3 years, right? I think it's fair to say that if these assets, the Warner assets, don't join a bigger, stronger company, they'll only get weaker, right? So the longer you wait to do this deal, one would argue the less those assets become worth.
Well, when you say we don't know what the world's going to look like in 3 years, that also means we don't know what the political landscape is going to look like right now in 3 years, but we do know what it looks like right now. And already the Trump administration regulators are making some noise that they don't seem to like this deal because it would give too much streaming power to a consolidated Netflix Warner Brothers Discovery group. So when you see that these two people on the screen, Democratic Senator Liz Warren, who rarely agrees with President Trump, that both of them don't like this deal. And I'm not speaking for President Trump right now, but his regulators are already getting the word out that they might not like it. And keep in mind, Netflix is run by somebody who is heavily Democratic and donates a lot to the Democratic Party. You look at that and you say, how is it possible that both these people are possibly against this deal, but for different reasons? Liz Warren, when she put out her letter, she didn't like a Paramount Skydance deal initially because she said that that would give too much power, and she doesn't like the fact that David Ellison, the CEO of Warner Brothers Discovery, is the son of Trump supporter and donor Larry Ellison of Oracle. So you got to look at all of that and really say, is Paramount, does it stand a better chance? And what happens with Netflix? Are they ready to up their deal?
Again, a lot of this has been talked about already. Just, a lot of this is not necessarily a surprise. I think it was understood no matter which company emerges like the kind of financial winner, right? It's an auction. Technically, would go through an antitrust process, right? So whether Paramount had to go through the antitrust or Netflix or Comcast, the thought was that that would happen. And then ultimately it comes down to the regulators have to try to decide how they define the market. Is the market all kind of everything people spend on television entertainment content? Do you include plus movies, plus streaming? Do you include the ad market? The ad market is almost $1 trillion market, right? Do you include digital? And then ultimately the way they choose to interpret that will determine if ultimately they rule against it, it'll be appealed and it'll go to a higher court, and a higher court will kind of ultimately decide whether or not that interpretation is legal. Typically, the more you try to slice and dice the definition of a market, the harder it is to win, right, on appeal. And so if you look at the broadest market, again, you cited Netflix has 8% share of U.S. viewing, right? HBO Max like 1.5%. So technically, these two companies are less than 10%. And look, just for the SEC's purposes, 10% is typically the threshold where you actually have to disclose if something is material. Then if you start to think about advertising, Netflix only does like $1.6 billion this year in advertising, right, out of a $800-900 billion kind of ad market if you include everything. So our sense is that Netflix has a pretty good shot at getting through the regulators.
Okay, so you think that eventually that might happen, almost like when AT&T way back when had to fight the first Trump administration regulators to take over Warner Brothers. When you look at the stock of Netflix, there was a negative reaction initially. In fact, it fell a lot more, and it is still down, but it's come back a bit. How do you think shareholders feel about this? Why wouldn't they like this?
I mean, technically, they don't need to do this, right? This is a company who we have, growing revenue 12, 13, 14% for the next few years with close to, 18, 19% cash flow growth, 20% earnings growth, in a position to buy back 20% of the company's stock over the next few years with not a lot of risk, right? They just have to keep doing the same thing. And so I think investors are saying, why do you need this? Why are you taking on the execution risk? There's not a lot of details right now because given that this is going to go in front of likely to court, I think the company is purposely being very thoughtful about not, saying too much right now. And so look, there is execution risk to this. So you have to kind of discount that execution risk in. And yeah, that's now what's interesting from a stock standpoint. I think why this stock is a good buy or a good entry here. No matter what happens, I think you win. I think if they do get the asset, we could talk about the benefit to Netflix. And if ultimately they're not allowed to buy it, the stock could probably rallies on that. So I think either way, the stock is set up as a win-win for shareholders.
Well, listen, they have been the team to beat in streaming, even when Disney Plus entered the picture. Obviously, Amazon Prime is in there, Apple TV, Apple Plus. So, you've got an outperform at $145 price target. Right now, the stock is at $100. You say it could go higher. Is there anyone else in this space whom you cover that you also like or you say stay away from?
Yeah, I mean, we cover internet broadly. Probably the most interesting stock right now is Amazon. while they do have a streaming business, it's really for the upside to the AWS, the cloud business. In your last interview, you talked to HP, but ultimately, Amazon was late, right, to the AI kind of cloud scale up, and they're correcting that right now. And ultimately, if you believe they can double their capacity over the next 2 years, it looks like their revenues are understated for that segment by 20%. And it doesn't look like that's discounted in the stock. I would also argue that, Meta still, Google is still at the early days of kind of leveraging AI. The stock's done quite well, but I think there's more to come there. We also like Spotify as well, another streaming play that's probably going to raise prices in the not too distant future. There's a debate. We don't know, is it $1, $2, but will probably raise price. And it's probably the most underpriced media service right now in the world.
And keep in mind, when you talk about Google, they own YouTube, which is the 800-pound gorilla when it comes to streaming. So a lot to watch here. And thank you, Jason, for coming in front of the cameras on an extraordinarily busy day with this Netflix WBD deal. Thanks so much.